Hey everyone, and welcome back to another cryptocurrency video. In today's video we will be discussing the civilian unemployment rate for the United States economy. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, as it always means a lot to me. And if you are a fan of cryptocurrency, I have a cryptocurrency shop where you can shop cryptocurrency products. I'll leave a link in the description down below so you can get a discount off your next shop. So without further ado, let's begin. And this is another macro video, and I don't want to bore you too much, but it does have some sort of relevance and significance with regards to risk on assets, just like the stock market and just like Bitcoin and the rest of the cryptocurrency asset class. Whilst it's important to note that with regards to Bitcoin, if we take a look at this chart, this total chart right here, this is the unemployment rate, and it dates back many years. But it's important to note that Bitcoin was created at the back end of 2009, towards the end of the global financial crisis. So it's important to note that Bitcoin has essentially known an economy. Well, the reason why we like to compare it to the US is because US is some sort of a powerhouse. You know, it's one of the biggest economies in the world. So a lot of economies by extension follow the US's economy. Because if we were to take a look at the UK's unemployment rate, for example, yes, the statistics might look a little different, but it would essentially result in the same thing. So it's better to just look at the US unemployment rate. We've recently just got new data points for the US unemployment rate, and the US unemployment rate has come in at 3.9%, which is higher in comparison to where it was last month. You can see that in Jan it was around 3.7, and now in Feb it's gone up to 3.9, so it's gone up by 0.2, yeah. Anyways, just going back on my note with regards to Bitcoin. Bitcoin was created at the back end of 2009, so Bitcoin has essentially only known the unemployment rate go down apart from one pandemic, one black swan event, one pandemic that caused unemployment rate to go through the roof. So what happened to Bitcoin during that time? We all know that Bitcoin had a massive 50% crash, along with the stock market too. Right, so right now, what can we do to analyze the unemployment rate? Well, we can compare it to certain metrics. We can compare it to the US interest rates. You can compare it to the stock market, and you can compare it with Bitcoin. So if we just take a look at what it looks like with regards to Bitcoin, as previously mentioned, if we turn this into a logarithmic scale, you can essentially see that, as I mentioned, Bitcoin has just relatively lived a economy that was essentially recovering from the global financial crisis, and then lived through a pandemic. And then again, the unemployment rate has come back down. Subject to change though, because the unemployment rate looks like it's found the bottom, and it's now looking to have an uptrend back up to the upside. And that corresponds to the current macro climate that we're in, which is what I'm going to discuss more importantly in this video. So Bitcoin you can't really compare it to, as mentioned, but if we take a look at the stock market and we compare it to the SPX, if we come here, okay, it doesn't want to go all, set a new price scale. We have more data for the S&P 500, and you can see that there is some sort of a correlation with the S&P, because every time the unemployment rate goes down, stocks seem to go up, and vice versa. Yeah, when unemployment rate goes up, stocks seem to go down. When stocks go up, unemployment goes down. When unemployment goes up, stocks go down. So you can see that there is some sort of a negative correlation between unemployment rate and the stocks, because the unemployment rate is a metric that can be used to essentially describe or validate a real recession. Yeah, you can have all these metrics, you can have all of these charts, all of these suggestions, but what ultimately puts the economy on a brink of a recession, is high unemployment rate. And that is where we are today, where we've currently found the bottom and the unemployment rate is starting to tick upwards to the upside. Month over month, we have increased by 0.2%, which isn't a good thing for the economy. Yes, the economy has put in unemployment lows not seen in the last 40 years or so, but that has quickly changed. The narrative has quickly changed. But why does that happen? Why does high unemployment rate happen? And that is because of strict monetary policies. If we check our interest rate tool, interest rates are currently between 5.25 and 5.5 basis points. The Fed is looking to continue to leave the rates higher for longer, with an expected pause in the next two FOMC meetings. So the Fed is expecting higher for longer. Why? Why, if the unemployment rate is starting to go up, why are they still looking to have the rates higher for longer? Well, that's because it's not high enough just yet. And normally what happens if we overlay this with the interest rates, the Fed waits too long before they then decide to cut rates. And because they've waited too long, the economy just breaks. It just folds within itself, and that is when a recession happens. If you take a look at the dot-com bubble crash, you can see that the Fed just waited too long with high interest rates, and then boom, recession. Same again in the global financial crisis. The Fed just waited too long, and then what happened on the brink of a recession? Boom, unemployment rate rises. The pandemic, yes, you can argue it was a black swan, but the same thing occurred, that the rates were held just a bit too far long before, boom, unemployment rate starts to rise. And when the unemployment rate's on an uptrend, that is not a good sign for the economy, because if the economy decides to hold rates high for longer, just like so here, then boom, the unemployment rate is going to rise significantly again. So why would they do higher for longer? Higher for longer is a thing because, one, the Fed hasn't reached their target or their inflation target of 2%, which at the moment it is currently 3.1%, and the Fed's target of inflation is 2%. So the Fed hasn't reached their target of 2% inflation, and the unemployment rate is still relatively low. Hence why the Fed is still keeping rates higher for longer. So we can't really do much with this information as of yet until more data comes out, until more Fed meeting comes out. And besides, the economy usually feels the effect of strict monetary conditions usually a year or two after they begin to start raising the interest rates. So if we take a look at interest rates right now, you can see that yes, over the last year or so, interest rates have risen significantly, but the US economy doesn't really feel it until 1 to 2 years later. It's only now that they're starting to feel the effects of it, hence why all these cuts are coming, all these job losses are occurring, hence why you can now start to see an uptrend with the unemployment rate. I hope that's been some useful information. If you have any questions, let me know in the comment section down below. I'll do my best to answer it in the comments or maybe in another video. But you can clearly see that there is a clear trend between unemployment rate and recessions, and a recession could be upon us in the near future. If you like this type of content, make sure you hit that like button, make sure you hit that subscribe button, and as always, it's been your boy J1 General. Thank you and goodbye.